All right, so you've been glued to the financial news lately. I get it. Interest rates, they're kind of the talk of the town, right?
Yeah, everyone wants to know what the Fed is going to do next, especially with all this talk about rate cuts.
And that's exactly what we're diving into today.
We're going to unpack some of the data you sent and those polymarket odds.
Yeah, those odds are kind of like our crystal ball for this deep dive. They give us a glimpse into what the experts are predicting.
Exactly. We're going to look at this recent rate cut from the Fed, what it could mean for the rest of the year, and we'll also touch on how this might impact you.
Because let's face it, this isn't just some abstract financial stuff. This is about your money, your investments, maybe even your mortgage.
Absolutely. So let's get right into it.
Okay, so the Fed just slashed interest rates by 0.5 percentage point. That's 50 basis points if you want to get technical. That's kind of a big deal, right? What's the story there?
It is a big deal. So this is the first time they've cut rates in like almost a year. So it's definitely making waves, and it has a lot of people wondering what's going to happen next.
So why'd they do it? Was it just out of the goodness of their hearts?
Well, not quite.
Yeah, I figured.
2 words: slowing economy. You see, when the economy isn't growing as fast, the Fed sometimes lowers interest rates to try and stimulate things, to get people spending and borrowing.
Makes sense. It's like giving the economy a little caffeine boost.
Exactly. Plus, we can't forget about inflation, which has been cooling down lately.
All right, inflation. That's the other big thing in everyone's minds.
It's been a major headache for, like, everyone, but the recent CPI data shows it's finally starting to ease a bit.
That's got to be good news for the Fed, right?
Definitely. It gives them a bit more breathing room to, potentially cut rates further without sending inflation spiraling out of control.
And that's where those polymarket odds come in, right?
Exactly. They give us some clues about what the market thinks the Fed will do next.
Okay, so walk us through some of those odds. What are they saying?
Well, according to the odds, there's only about an 8% chance of a 75 basis point cut later this year, which would be a pretty aggressive move.
So not likely, but still possible.
Exactly. The odds favor a more cautious approach, like maybe another quarter-point cut. But here's the kicker. Even with inflation cooling down, the polymarket odds still give us a 59% chance of it staying above the Fed's 2% target in September.
So they want inflation to go down, but not too fast.
Pretty much. It's a delicate balancing act. They want to keep inflation in check without completely stalling the economy.
This is why I leave this stuff to the experts. It's a lot. But let's get down to brass tacks. What does all this mean for the average person? What should they be doing with their money right now?
It's a great question. And unfortunately, there are no easy answers in economics. But even if the Fed cuts rates again, which is still a big if, persistent inflation means your purchasing power might not be what it used to be.
So everything's more expensive.
In a nutshell, yeah. So having a solid financial plan is more important than ever. Think about your long-term goals, maybe talk to a financial advisor, someone you trust.
Okay, so we've got the Fed over here potentially cutting rates.
Yeah.
What about the rest of the world? Does this put pressure on other central banks to do the same? Like, what about the European Central Bank? What are they up to?
Well, the ECB is keeping a close eye on all of this for sure. Polymarket odds currently give us a 33% chance of an ECB rate cut as early as October.
Whoa, October, that's like right around the corner.
Right, and by June of 2025, analysts are projecting their key interest rate to land somewhere between 3% and 3.75%.
So they might follow the Fed's lead, but then again, they might not.
You got it. See, the ECB has been very clear that they're data dependent. They're going to make their decisions based on how the European economy is performing, not just on what the Fed is doing.
It's like a game of global economic chess. Everyone's watching everyone else.
Mm-hmm.
So with all that in mind, what's the one thing you really want to leave our listeners with today?
Don't just rely on the headlines. Look at the data. Inflation reports, job numbers, all of those economic indicators. They tell a story. And understanding that story is more important than any prediction or any hot take. Pay attention to the data.
Awesome. Thanks for breaking all of that down. Until next time, keep an eye on those economic indicators, and we'll be here to help you make sense of it all.